Money Day, guys and girls, welcome back to another episode. You're now locked in and you're learning with Vel. Now, in today's episode, we are going to be diving deeper into what's really happening with the US dollar, how politics are playing a major role in the markets right now, and what that means for gold as well as for Bitcoin, BTC USD. Now, it's been some time since I've given you guys one of these types of videos, these breakdown videos, and I think it's really important to share with you guys the importance of refreshing your batteries, charging yourself up, and putting yourself in a position where you can have a high output instead of a mediocre one. So for me, you know, my seasonal break has been gone. I'm back like I never left. And most importantly, I want to share with you guys an update so that you guys can have a better understanding on how you guys can better plan your trades, and of course, how you guys can understand the bias on what the market directions currently are. So with no further ado, if you're watching this, make sure you like, subscribe. If you haven't already, smash the like button, bro. It costs you £0, 0 pence, right? It doesn't cost you much, but it does help the algorithms. Appreciate a lot of you guys who continuously tune in. Love for the love. But of course, let's waste no time. Let's get straight into this. So as usually, the first thing we want to do is check out the economic calendar to see what news we've got taking place this week. We've already had the Australian interest rate come out, and the rate has actually been reduced. Okay, there's a big talk of governments reducing interest rates. We can see here the interest rate was at 4.10%. It's been reduced now to 3.85%. Throughout the rest of the week, we've got CPI for the pound, and then we've just got US dollar news, initial jobless claims taking place on Thursday, but not really an action-packed week when it comes to news that is taking place. The crude oil inventories will be a big one, of course. They believe the forecast will be minus 1.850 million barrels. We'll see, of course, how that plays out. But right now, the US dollar is going through a period of mixed sentiment. Okay, on one hand, we've got strong economic data like robust job numbers and stubborn inflation, which normally supports a stronger dollar. Right, if I head over to the DXY so you can kind of grasp what I'm saying here, because on the other hand, we have politically uncertain weighing on investor confidence. Okay, the uncertainty is weighing on investor confidence, which is essentially, guys, creating this false high, which is now seeing us coming back down lower. Now, of course, if you look at this on a higher time frame, you guys could say that this was potentially a lower high for us to now come down and potentially make a new lower low. But one thing we can't ignore, when we look at this on the weekly time frame, even if we go on the monthly, but just before we change this time frame, we've stayed inside of this range, guys, since 2022. So only until this year, okay, what was this, April, only until a couple of months ago did we really see price come below this 4-year low, okay, this 3-year low. It hasn't really done much. Yes, we've had price pushing higher, we've had price pushing lower, but in the grand scheme of things, we haven't really gone anywhere regarding the dollar. And what that actually means is, since Donald Trump has stepped into the White House, we're seeing the dollar weaken. We're not seeing it strengthen. We have seen it strengthen as we approach January, but really, as soon as he came into the White House, we just saw the dollar getting weaker and weaker and weaker. Now, to put it simply, think of the US dollar like a car. The engine is the economy and it's running well. But the driver, which is the government and political leadership, is a bit shaky right now. That's making investors cautious. Okay? Now, politics, and if you guys have noticed, I keep looking to the left. I've wrote notes down because I really want to give you guys the most important part of this. It's not really the charts. The technical analysis is always great. I can do that with my eyes closed, but there's key important factors that we can't look past, and that's actually going to be the update that's going to help you guys understand what's going on. So politics is a big factor here. The US is heading toward an election in November, and markets hate uncertainty. Okay, we've got debates over fiscal policy, spending, and debt, all of which are making headlines and creating massive volatility. Okay, if we look at the VIX, which is the volatility index, you can see here, guys, I've got some notes which says the stock market declines from this zone.
Look at me, sure. Look at me, sure.
I'm the captain now. This pilot made $400 whilst flying a plane and copying my trades on autopilot.
So all the thanks to you, Mr. Bell, made 40% of my balance account while I was flying. So you are the captain now, not me.
I'm the captain now.
You're the captain.
Now, thanks to technology improving, you guys can copy my trades within 3 simple clicks. You can either scan the QR code you see on the screen or click the link wherever you find it. I've got a pilot following my trades on autopilot. Doesn't get any better than that, and it also means you don't have an excuse to not join the crew.
Thank you, Bell.
That's right,
I'm the captain now.
so if he can do that, what's your excuse? Scanning the QR code or clicking the link will get you a 70% credit bonus, which gives you more fuel to make profit. So what are you waiting for? I'll see you on the other side. By 10% or more. So every time we get into this range here, if you have a look at the stock market, it declines 10% or more. That's a fact, right? And every time we get down here, stock markets make a new high. So this was, of course, you know, some homework that I'd done quite some time ago, and it's never failed me. What we can see over the past few weeks is we shot right up past this zone, which, you know, when we look at things here, the last time we was up there was 2020. That was 5 years ago. So what we could understand is, I mean, we saw the stock market selling off, right? We saw a huge sell-off in the stock markets. We saw the news saying that trillions of dollars was lost. You know, we saw this over the space of maybe 2 or 3 weeks. Pardon me. Maybe 2 or 3 weeks, 2 weeks, we saw massive sell-offs. But ultimately, guys, every time price comes towards this gray zone down here, I'm going to extend it again, if it will let me extend it. Every time price comes down to this zone, this is a major indication for us about to shift our direction and push higher. And the reason why it won't, because it's locked. Perfect. And for us, this is really important, guys. Okay, it's really important because it helps us understand a bit more about the technicals lining up with the fundamentals. Okay, now, for example, recent discussions about the US debt ceiling and whether the government can manage future borrowing is making some investors question the long-term stability of the dollar. Okay, when this comes up, the stock market goes down. When this comes down, the stock market goes up. But based off of what I've just said, when we're looking at the US dollar, let's go on a daily time frame. When we're looking at the US dollar and we look at it over the past, let's say 100 days since Donald Trump's been the president, there's only been one direction, guys. That direction has been down. We've seen lower highs, but we've seen lower lows. Lower highs, lower low, lower highs, lower low, to the point where we're at right now could potentially just be another lower low. Okay, sorry, it could be a lower high before we then go down to make a lower low. If we look at this like this, you can see it a lot more clearer here, guys. We've had lower highs, lower lows, lower highs, lower lows, lower high potential here for a new lower low. There is not much optimism with the US dollar, and you know, like I just said to you guys, the US debt ceiling is a big concern. Okay, recent discussions about the US debt is why investors are questioning the long-term stability of the dollar. That's what I wrote down because I really wanted you guys to understand that. And remember, when global investors lose confidence in the US policy, they often shift into safer assets, or in some cases, more volatile but decentralized options like Bitcoin. I'm recording, bro. Like Bitcoin. Okay, BTC USD is a major asset. We've seen it pump, we've seen it dump. A lot of you don't understand the correlations between the US dollar or the US economy to Bitcoin. But what's really important to understand about Bitcoin is that it works pretty much like a safe haven. Okay, and speaking of Bitcoin, it's been rising sharply. Okay, it's been rising sharply. We can see here it's currently sitting just over 105,000. If we go onto the weekly charts here, we can see that we had a huge push to the downside, which some investors, even myself, questioned if we would see lower prices. We did have price come down and fill a lot of the imbalance that we had over here. Okay, and price came down, it filled the majority of it. It filled the majority of it. It whisked away and then it pushed up. Okay, so if we open this up here, we can see here a lot of you are trading fair value gaps, and you're not understanding that price isn't always going to complete your fair value gap. It's not going to do that. It's not always going to come down to the zones that you want it to, which is going to result in you missing out on opportunities. In this case, price did take the majority of the imbalance. Yes, I understand, guys, if you're looking at this on a weekly, of course a weekly is going to be different to looking at this on the hourly. But if you're looking at this on a daily, if we go down to the daily time frame, there's one thing you can't get away from, which is the fact that when you're trading Bitcoin, you need to have a wider than usual stop loss. On average, Bitcoin can move between 1,000 to 1,500 pips. So you need to really understand how big is your stop loss going to be, because you look, in my opinion, the whole point of trading is to catch profitable moves, but you also have to understand that you need to lose in order to win. So I'm not a trader that wants to trade a 1-to-1 R&R, 2-to-2, a 1-to-1 R&R or a 2-to-1 R&R. I'm a trader that wants a minimum of a 3-to-1 R&R or more. I'm not going to get greedy and say, oh, I'm only in it for 10-to-1s. No, I'm in this for something 3 times as a minimum of what I'm risking. And that helps me understand if some positions are worth getting into or not. A lot of you may struggle with trading because you're getting into trades where it's 50-50. You're getting into trades where you're not too sure, and even if you are sure, where your take profit target is would actually equal the same amount you're risking. Therefore, the risk to reward isn't working in your favor. And it's really important to understand, whenever you're taking trades, you have to think about the reward being greater than the risk. Otherwise, you may as well go to the casino, put 50 down on black and give it a spin, because you've got the same amount of chances, right? So when we understand Bitcoin is like the US dollar, okay? It's like this. If the US dollar is a currency controlled by the government, Bitcoin is the opposite. It's decentralized and not influenced by any one country's politics. So when there's political tensions or distrust, whether that's in fiscal policy, Bitcoin starts to shine as a kind of digital gold, as it were, okay? Now, we've seen increased institutional demand since the approval of the Bitcoin ETFs earlier this year, and that's added more fuel to the fire, okay? A lot of you are not aware of the Bitcoin Trust, okay? This is the Bitcoin ETF. I've said it on countless videos in the past. I've explained it and shared this strategy with students, but this is what I use to help me understand the direction of Bitcoin. It only, of course, is open during the New York Stock Exchange hours, but nonetheless, if this goes up, Bitcoin is going up with it. If this comes down, Bitcoin is coming down with it. So I use this pretty much like the GDX, okay? Or I use it like the DXY to trade in the Euro USD, or the Japanese yen basket to trade in Euro JPY. It helps me understand the strength of Bitcoin. And that is invaluable, guys. A lot of you are taking trades based off of your analysis, but fundamentally there's aspects as to the reasons why your technicals aren't lining up. And if you can't find outside information away from the instrument you're trading, technically to further support your trade bias, then you're pretty much leaving your chances down to a 50-50. Rather than me just listening or reading or listening to Bloomberg online, reading some articles and then looking at my technical analysis, I also look at the Bitcoin Trust because it helps me understand the direction of where Bitcoin is going, right? Pre-market information before the market opens, Bitcoin Trust will either be up or it will be down. If it's up, of course, that gives me an indication of strength. If it's down, it gives me an indication of weakness. I use these factors to help me understand the price and the direction, as well as using the NASDAQ as well. Now, what's really interesting here is that we've seen increased institutional demand, right? I want to really break down for you guys what the institutional demand is, okay? When we see aggressive price action, when we see huge, big bullish candles, that is when institutions are entering the market. If we have a look at this Bitcoin chart here, a lot of you seem to think sometimes when price is moving like this, you know, institutions are buying and they're selling, they're buying and they're selling. That's not the case. In actual case, when we're seeing big, bullish, aggressive candles like so, this one here, let me highlight it for you guys in case you can't see. When we're seeing candles like this, Okay, these type of huge candles, these candles represent institutions getting into the market. They are purchasing this asset. When we see huge bearish candles, they're also selling the asset. But it's important for you guys to understand the difference. Don't look at this price action over here and think institutions are getting into the market. This is obviously a schematic of reaccumulation, but nonetheless, you need to understand the difference. When I'm trading, I'm not trading to get into price. I'm not trading for the sake of trading on a daily basis. I need to get into trades when I'm seeing these big moves occurring. If these big moves are not occurring, I'm not looking to get into the markets. The question you'll probably ask is, well, Vel, how can you ascertain when the markets are going to be moving like that?
Yo, Val, come check this trade, bro.
Well, the easiest way to understand that, guys, is actually letting the markets move. Because when the markets moves, they give you opportunities to get in on a pullback. That is one of the biggest things that I could say that's the easiest for you guys to take advantage of. Don't try to foresee something happening. Just react once you see it happening. That's the best advice I could give you guys. Like I said, I look at the Bitcoin Trust. That helps me understand when there's volume inside of Bitcoin as well. If the Bitcoin Trust is moving sideways, let's go on an hourly chart. If it's moving like this, I know there's no volume in here. I'm not going to get roped into trading like this, right? Because really I use it on a smaller time frame, okay? As we can see here on a 15 minute. What can we see here on a 15 minute? Pause it, tell me what you can see. You should say that you can see it ranging, right? Which again, further tells me, unless my alert at the top or at the bottom is hit, price is just moving sideways. I don't want to be caught up in positions. I don't want to be caught up in trades where the market's just ranging, because unfortunately, that's how the market likes to collect orders. That's how it collects orders. That is how it burns a hole in my pocket. Market's moving sideways, but it's fooling you to thinking it's going to make a new high. Oh, now it's going to make a new low, but it's not. It goes up, it does a fake out, it comes back down, does a fake out, comes back into the same range. Anytime price creates a range, I want you guys to understand this. For some of my long-standing students, you'll know, anytime price makes a range, it has a 70% chance of returning back to that range. So for us to know that, it means we need to either see price break above, close above, and retest higher to push up. Meaning, let me show you, because I'm showing you with my hands when I could just be showing you on the charts. Okay, when price pushes up here, if it comes back and retests here, that's what we want to see. That's a clear indication of us breaking away from the range. But what's happened here? Price is pushed up out of the range. Like I said, 70% chance of price coming back down. Well, when it was closed, the following open, what's happened? Price is opened back inside of the range. Now we're hovering inside of there again. We need price to break away and show us clear signs of pushing in order for us to get into trades, guys. Otherwise, we're fishing in the mud, expecting to find a fish. It's not going to happen. Okay, so let's talk about gold, because I know a lot of you have been following my gold trades. Gold's kind of been back. We've kind of had a lot of success with gold recently. So, you know, gold, it's the classic safe haven, guys. Okay. I'm not really going to talk too much on what we've seen with gold, because I think we've all seen it, right? We've all seen what's happened with gold. If I remove this, what's happening there? Here we go. Yeah, cool. So if I remove this, look at this here, this all-time high. That's funny. Cool. So we can see gold is currently trading at the moment $3,279 an ounce. Gold has probably had a sufficient pullback enough for price to push higher. It came down like Bitcoin, filled a lot of the imbalance, and we're probably pushing to the upper room. Shout out Ned. Okay, now with that being said, we have pushed up, filled the imbalance, so we could get a consolidative period right now, but gold has been rallying hard, recently pushing above key levels. The question you might be wondering is why? Vel, what is going on with gold? Why is gold pushing when it should be coming down? Some of you might be saying. Why is gold working in line with the DXY when they're meant to be opposite? Some of you may be saying. Well, whenever there is geopolitical tensions, inflation risks, or the dollar weakness, gold becomes the go-to hedge. Okay, and I know that I know gold and the dollar has been correlating recently, which actually shows us more diversion. But the reality is, guys, if you think of the American government like a talent show, they're trying to show that the talent is not faded. So they're going to manipulate certain assets to make us feel like the price or like the strength in the economy is still remaining. Hence the reason how they was able to pump the stock market a couple of years back, just post out of lockdown. They was pumping the stock market even though we knew their economy was struggling. There was global tensions in the there was tensions inside the country, riots, but the stock market was pumping, right? We're having a look now, and we understand that if we think of it this way, if the dollar is a boat in choppy waters, gold is the lifeboat. Investors jump into it when they're unsure what's next for the global economy or political landscape. So we can understand institutions, Goldman Sachs, they've made it very clear they've been purchasing gold for some time now. And really and truly, we've seen central banks for some time kind of openly come out on Bloomberg. For those of you who watch Bloomberg, if you don't, you should be. But especially countries like China and Russia, they've come out and said they've been buying up gold reserves. So this is further supporting the price growth. It's further supporting the reasons why once we see gold coming down, that we should be expecting it to make a new high. Ultimately, on the monthly time frame, we're still very bullish, right? If I go on a blank canvas quickly, okay, we're still very bullish on a monthly time frame, and on a quarterly time frame, we're still bullish. Okay, the weekly just shows us that we've pushed up. We've consolidated a bit over the past 4 weeks. We've come down, filled the imbalance. We could technically push from here. I mean, look, guys, gold is not something that we should be trying to foresee happening. We should just be reacting based off of what we see happening. Don't try to second guess where gold is going. There's too much global tensions, political tensions right now to say, oh, well, technicals are showing us that gold should be coming down. I think it's going to come down. There's no need to get into a trade like that, guys. The biggest trade right now is the trade that you sit out on. That's the biggest trade. That is the biggest trade. I just took over a week out of trading, guys. Over a week. Alerts pinging off left, right, and center. Trades popping off. Opportunities. People messaging me. No trades, no trades, no trades. Well, how comes no trades? But guys, the hardest thing is to sit on your hands. And sometimes that is the biggest lesson. That's the biggest training exercise. Watching the markets unfold and sitting on your hands, saying I'm out, I'm not looking, I don't want to know, right? That is an important thing here. So, some takeaways for you traders who have been tapped in, and if you've made it this far in the video, comment down below LWV. Now, the US dollar is under pressure due to political uncertainty despite strong economic fundamentals, okay? I'm going to be honest with you. I see the dollar continuing to drop. I don't see it rising anytime soon. Trump is creating tariffs. He's taking the tariffs off of the table. He's doing so much stuff that we would have seen the dollar react positively if what he was doing was helping, but it's not. So let's not try to foresee something here that we can't see. Let's try to react. Okay, cool. We might get the dollar pushing up higher, but when we look at it on a weekly, when we look at it on a monthly, we understand the dollar is just having a small little pullback. It's broken its range. It's broken its 4-year low, right? Since 2022, we're in 2025. It's a 3-year low. We've broken this 3-year low. Now we want to see if price can actually come down to the lower room. We want to see that happening, okay? So, okay, a pullback might happen. The dollar might get temporarily strong, but we're not looking at a dollar pushing higher above the $100 mark. We're not looking at that 100 points mark. We're looking at the dollar falling, which is going to support majors. And it's going to help me help you guys. Inside the Discord, I'm going to be back with live streams. I'm also going to be back with sending you guys some more trades, some more analysis. So if you're watching this video on YouTube and you're new to my channel, This is the perfect place to be for someone who trades institutional concepts, for someone who provides a lot of education, and for someone who provides you guys live trades in the flesh, where you guys can see exactly how I'm able to scream out money day alongside you guys. Bitcoin is benefiting from both political fear and mainstream adoption. Positioning itself as a store of value and a speculative asset is its benefit right now. So the longevity of Bitcoin is always going to be good. Okay, a lot of investors, a lot of economists seem to believe Bitcoin will hit 140k this year. It's not something that's too far to believe, if I'm really honest with you guys. So look, when we're looking at Bitcoin on a monthly, we pushed up, we came down, we pulled back. We could now be heading for another parabolic shift upwards. It is not speculative. It is not something for us to doubt. The price of Bitcoin is going to continue. It's just a case of when, guys. Gold is rallying on the back of safe haven demand. Central banks are purchasing gold more and more and more. And, you know, there's fears of inflation or dollar weakness. So these things are going to support gold. Gold is bullish. Bitcoin is bullish. So whether you're trading Forex, commodities, or cryptos, keep your eye on US political developments. Okay, they're becoming just as important as the charts. Right now, it's really important to understand what's going on. Like I said, tune into Bloomberg. If you guys are not really up to date with economics, then if you click the link in my bio, you guys will get access to my Discord. Having access to my Discord, I'm going to break down to you guys live in the flesh these economical outbreaks or these economical updates, so that you guys can understand in layman terms what this means for you, whether you guys should be buying or selling. I hope you guys have enjoyed this video. Let me know in the comment section below if you found this breakdown helpful. Let me know how I could improve. Let me know what assets you trade. Let me know if you're looking at Bitcoin. Let me know if you want me to break down anything else, should I say. I stayed away from XRP because I'm tired of it, but if you guys want me to break it down, I'll do that for you. And don't forget to like, subscribe. You know the vibes, it's lit side. If you're tuned in, you're locked in, you've been here with me, you've been learning with Vel, and I want to thank you guys and say, don't forget that every day is money day. Peace.